good morning. I'm back again. My name is Samantha and I am your local Georgia real estate agent. And if you love to listen to real estate content, homeschooling content, hit that subscribe button and like my channel for all of those types of videos. So there are 4 types of financing that I'm going to go over with you today. And they are a conventional loan, FHA loan, VA loan, and a USDA loan. And I'm going to tell you the differences between those 4 types of loans. So with a conventional loan is usually 20% down. It can go as low as 3% down, but then at that point you have to have the private mortgage insurance, which is an insurance that basically covers your loan if for some reason you default. So if you pay 20% down, you don't have to pay that extra private mortgage insurance every month. But a conventional loan is not a loan that's backed by the government. It's strictly from a bank or lender. Your credit score must be at least a 620, and your debt to income ratio, which is how much you owe every month towards your bills, your car payments, stuff like that, to how much you make. It needs to be 50% or lower. And the down payment is, whether you get 3% or 20%, it's based on individual personal situations. So depending on how high your credit is, how much money you make, or whatever. An FHA loan it's backed by the Federal Housing Administration, and usually this is the loan that first-time home buyers get because your down payment is usually only about 3.5%. And it is a government-backed mortgage. And with an FHA loan, you will have the private mortgage insurance that you have to pay every month on top of your mortgage payment because it has to be covered in case you default. It's just part of the process. The FHA, they're definitely more strict on the home conditions. You cannot buy a fixer-upper with FHA. I mean, if it needs like cosmetic details, but it cannot need a new roof, new HVAC, stuff like that. All that stuff has to be in good working condition to pass the FHA appraisal. Your credit score typically needs to be around 620. Some lenders will go as low as 580, but it is really hard to get an FHA loan with a score of 580. Then there is the VA loan, and it is backed by the Veterans Benefits Administration, and this is the loan for veterans or active military or surviving spouses. So if you fall in one of those categories, this is a great loan for you because it is 0% down payment, and it has very competitively low interest rates. So basically, it helps you for serving our country or your spouse serving our country. It's an incentive. There's very limited closing costs associated with it, and it's a lifetime benefit. So that's awesome. And then the 4th type of financing is a USDA loan. And this loan is really amazing because it is 0% down payment, but it only covers rural areas that has been determined by the U.S. Department of Agriculture. So they have outlined what areas that is, and if you just pull up the USDA website, it'll give a map of Georgia and it will tell you what areas are USDA qualified. Home for this loan, the home you're buying must be your primary residence. You must have a 620 credit score, and the home must be livable, so no fixer-uppers with the USDA loan either. And mobile homes are not permitted. So for FHA, a mobile home can be permitted, but it has to be on a permanent foundation, and it's harder to get. And then back to the conventional loan you can buy fixer-uppers with. So the FHA, VA, and USDA loans, they all have to be livable primary residences. Conventional, if you want to buy a fixer-upper, a fix and flip, a rental property, you will have to get a conventional loan to do any of that. Have a great day, and don't forget to like and subscribe to my channel for more real estate content.